Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor, owner of Elevation Financial. Thanks for joining me today. I'm excited today because I have a guest with me. Normally I do these solo, but today I get to bring on one of my favorite people, Kim Padgitt with the Tax Advantage LLC. Welcome, Kim.
Thank you for having me.
Glad you're here. So, Kim, you and I are basically teammates at this point, in my opinion. I know we're separate companies. I know we have separate businesses. You've got a team. I'm kind of doing my thing. But as far as I'm concerned, we're teammates. We collaborate a lot. We work on the occasional case together. I send a lot of my clients your way when they need tax and bookkeeping help. You send a lot of referrals my way as well. So I'm thrilled to be talking with you on the show today. And I'm shocked we don't do this more often. So we'll have to do it more often.
We'll get that on our calendars.
Yeah, absolutely. So I think that's in the works. So thanks again for being here. We're going to talk about quarterly estimated tax payments, which is a hot topic for the entrepreneurs that we both work with, either 1099s or business owners, whether they're sole proprietorships, LLCs, S corps. Those are kind of a sweet spot for both of us to work with. And it's a really important issue that comes up a lot in both positive and negative contexts. We see issues sometimes, and we often help people kind of get lined up and doing it properly as well. So before we jump into that, let's hear a little bit about you. You do a better job of introducing yourself, I think, than I would. So let's tell our listeners and our viewers a little bit about you and the Tax Advantage.
Sure. I started the Tax Advantage a little over 30 years ago. I'm an enrolled agent, which for those of you that are unfamiliar, it just means that my license is through the IRS and we focus mostly on tax savings. We do bookkeeping, payroll, and business consulting, but I've been doing tax returns for small business, medium business owners for over 30 years now. I'm the principal and managing member of our firm. I now have two partners, Stephanie Nielsen, who's been here for almost 11 years now,
Wow.
And Julie Pesic, who joined us about 2.5 years ago to help us grow and to fill in the gaps in places that I needed help with, like online software syncing and understanding each other. So we're a great threesome, and we have, a great support team. So we're a pretty growing company at this point, and happy to be so.
Awesome. And I'm really happy with your philosophy and your focus. You're kind of like me. You have a heart for serving individuals and small business owners, really like micro businesses that have maybe solo or a handful of team members. The gazillion tiny businesses all around the country that get overlooked sometimes by the big firms.
We call them underserved or ignored altogether.
Yeah, very underserved or ignored. And I love that you have a heart and a focus on helping those businesses as well as individuals and families too. So I really appreciate that. And I think it's one of the many reasons we work so well together. So thank you for that. So all right, so let's jump into quarterly estimated tax payments. I love talking about this because it is something that comes up over and over all the time. And it can get people in lots of trouble sometimes and cause lots of issues. And we want to avoid those issues and understand how quarterly estimated tax payments work so we can avoid problems down the road. So let's first talk about who needs to pay quarterly estimated tax payments. We'll kind of describe what they are, maybe I guess in the same context, but who should be paying quarterly estimated tax payments and what are they?
Yes. And before I get into that, I'm supposed to say every tax situation is different. So you should always consult your own tax consultants. But referring to what you just asked me, there are many situations where someone should pay estimated taxes from you sold an asset that you made a lot of money on. You should probably pay estimated taxes. You inherited money and the estate is not taking care of the taxes. You should pay estimated taxes. But mainly, and I think today we probably should focus on small businesses and the self-employed because they are the bulk of the taxpayer that should pay estimates. And they are the main people that get themselves in trouble by not doing so. Unlike an employee that everything is withheld from their check before they get money. A self-employed individual gets the gross. And especially if you're a new company or a small company, you always are needing money. And so you spend it all either to support your business or to support yourself. And you get to the end of the year, you've not made estimates and you owe the government money. If you do that for a year or two, then you're going to find yourself in a situation that's kind of hard to dig out of for a few years. So estimates are due starting with the beginning of the year. The first estimate of the year is due April 15th. Yes, it's due the same day that your balance due from the prior year. They're both due the same day. I don't know who decided to do that, but they are. And then 60 days later, June 15th, is the second quarter estimates. The third quarter, so if you missed the first two, you've got two more chances, those of you out there who need to make some estimates. September 15th is third quarter, and then January 15th, after the close of the year, is the fourth quarter estimate. So there are 4 months between the third and the fourth quarter, and 3 months between the second and third. I don't know why there are only 2 between the first and the second. There are two schools of thought for that. One is whether just hoping if you skip the first one, then 60 days later, you'll make one. And others say that it's because within 60 days, if you skipped all 3, you have a lot more penalty to pay. I don't know which camp I fall under. I just try to train people from the beginning, get your money and pretend you're stepping to window B and giving 30% back to someone. 30% may be too high for some people, but it's a good place to start, especially in states where there's state income tax. So for those of you that don't understand the self-employment tax that goes along with making estimates, very brief here. Say you make $1,000 after your expenses and you're self-employed. You owe $153 to FICA and Medicare. If you made that same $1,000 as an employee, you would owe $76.50, and your employer is forced to match that. But the government considers the self-employed that are sole proprietors or one-member LLCs, the employee and the employer. So you have to pay both parts. So right out of the gate, your taxes are 7.65 cents on the dollar more than someone making the same money as an employee. Now that stops at, I'm just going to do a rough thing here, around $142,800 this year. It will go up every year. It's gone up over $100,000. It started out in the 30s when I first started in business, and it's now up to 140. So it goes up every year, the amount that you have to pay that FICA and Medicare on. So you can see if you're paying 15 cents on the dollar for FICA and Medicare of your net, how 30% may not be too high by the time you get to the end of the year. And then if it is, and you've overpaid your taxes, you can just apply it to the quarter next year, or you can get a refund. It would certainly be better than getting to the end of the year and owing thousands that you haven't set aside to pay your taxes. So if you just train yourself right out of the gate or start today with that, you will be much better off in 5 to 7 years as a self-employed individual than if you just keep kicking the can down the road.
Yeah, and I want to unpack that a little more, but before we do that, I want to make sure we get really clear on, again, this is not specific tax advice, but just to kind of clear on the general scenario. If you are a 1099 contractor or a sole proprietor or an LLC or an S Corp, it is fairly normal for these types of entities to pay quarterly estimated taxes. Is that fair to say? It
is very fair to say and very accurate.
Okay, excellent. So if you're one of those entities, talk to your tax advisor, see if that applies to you.
Absolutely.
It may very well. So let's unpack what you said about the 30% number. And I want to get to the logistics about handling that a little bit later. But first, let's talk about why 30%. My understanding is that it's both federal and state that you're accounting for.
Yes.
And in general, a lot of people are kind of in that, at least currently at this time, in that 22, 24% tax bracket range. And then state taxes are anywhere from 3, 4, 5% to add on to that. And so is that where that 30% number comes from?
it is, I would arrange it a little differently. The self-employed, even if you're in a 10% income tax bracket, you still have to pay that 15 cents on the dollar for FICA Medicare. So then you add 10% as income tax bracket. Say you're starting out, and that leaves you 5% set aside to pay the state. So it could go higher than 30%, but I'm saying it's a good place to start if you've never started to put back that amount of money.
Okay.
A better place would be to talk with someone, a tax professional, and do quarterly estimate planning. But if you don't want to do that, at least set the 30% aside and make the estimates yourself.
Yeah. Yeah. And obviously I agree with you. The best course is to talk to someone like you and your team to make sure it's done right. But not everyone, has the ability or is ready for that quite yet. Maybe they're just starting up and they just haven't gotten around to it yet. And they're like, okay, I want to kind of get things rolling in that direction. That 30% number is a logical place to start before they talk to someone, hopefully soon, about doing it properly. Because what you'll do is you'll take into account, other income, and maybe someone has more than one business, or they have a partner or a spouse who is employed, or maybe they're also a business owner, and all this kind of fits together. And it gets a little more complicated than just set aside 30%, the more moving parts you have.
Absolutely.
So.
It really does. And, if you have 4 kids, your scenario is going to be totally different than someone who made exactly the same money and has 0 kids.
Right.
So there are other situations and factors to factor into the situation, but I just use it as a rule of let's start here.
Yeah. And just to be clear on that, it's not 30% of what you bring in sales. It is 30% of your net income, which is your sales income minus your expenses. So your net profit is where you take that 30% number out of.
Exactly, which is why it's also important for those of you that are 1099, that maybe you don't even really consider yourself a business, but you're being paid by 1099. It's still important to keep track of the expenses for your 1099, because you will be able to deduct some of that, and you will reduce your taxes by doing so.
Yeah. Yeah. And one more thing also, I think it's really good to point out is occasionally I find that some people aren't quite clear on what money is being taxed. They think that, let's say you've got a business, you're an LLC, single member LLC, for example, which is really common. You make some money in your business account, and then you move it over to, maybe you move some of it to your personal account and leave some in your business. Occasionally I find that people have a misconception that you're only taxed on what you move out into your personal account, but actually you're taxed on the entire amount that is your net profit, whether you move it to your personal account or not.
Yes.
And you still have to take that into account, and your 30% number, or whatever number you and your tax preparer, work on, that's coming from your net profit in the business. It's irrelevant what you transfer to yourself.
Right. You can leave it all in your business and you're still going to pay taxes on it.
Yeah, it's an important point, I think.
Yes, very important.
So let's talk about how to actually logistically pay it before we move on. I think this is a good point, because sometimes people say, well, I'll just kind of leave it all in one account and I'll just kind of earmark it and I'll just pay it. And I find, at least when I work with people in a coaching context, is that never happens. If the money's sitting there, it's going to get spent.
Yes, we've talked about this before.
Yeah.
This is what I tell people to do, and this is what I did when I started out, is having a separate bank than you do most of your banking with. Move it. Don't have a debit card. Don't have checks. Don't have any way that someone can talk you into spending it on the weekend, which is when most people do it, thinking I'll put it back next week, and then next week never comes. So
pause for a second. You're talking about a personal account, because your
personal account, yes,
money into your personal account, and then you have a separate personal account
for your
taxes, because you are being taxed as a pass-through entity, not your business.
Absolutely. So yes, it's separate. You're correct. It's separate personal account. Move that money there. Leave it there. Now, how you pay your taxes is, we used to send out, coupons and envelopes, and we thought that it was really good to have that little canceled check. Well, the IRS over the last year and a half, and the post office have been very unreliable. And the IRS has made great strides in making it a little easier to pay your income tax online at irs.gov. And when you do that now, you get an instant in your hand receipt that says it's paid. It's got a document location number on it. So that is the way we are encouraging people these days to pay their taxes, because the mail has been unreliable and the government is taking months to open checks. So I would suggest people go to irs.gov and make a payment. It's very easy to follow how to make a payment. They're happy to take your money. The states, for the most part, there are still a few that you can't pay online, but Indiana is not one of them. You can definitely pay. Indiana was ahead of the IRS. You can definitely pay your estimates with Indiana online, and they're pretty easy to get that done with as well. So that's how we're recommending people do it. It's pretty easy to do, and it's great to get that. The money's instantly taken out of your account, and you instantly have a receipt in your hand, and then you can record that.
Yeah. I agree with that completely. I have a whole separate bank I use for quarterly estimated taxes. So to kind of follow the path through, if anyone wants to kind of see logistically how this is set up. So, I pay myself from my business account to my personal account first. That's step one. Then I would take, for me, I budget every month a specific amount because I work with you and you do tax planning. So that's let's say you're not working with someone, you just set aside that 30% that you've calculated. That moves into a separate bank account, which in my case is a savings account. I just stick it in a savings account. Mm-hmm. And then I use a really high-tech online bank. And so I could just log in, grab the routing and account numbers. And then when it's time to pay each quarter, I go to irs.gov/payment. I make the payments online with ACH using the account and routing numbers. Boom, it's easy. Same thing with the state of Indiana. Just go to the online system, pay with the routing and account numbers directly from that savings account. It's super clean.
It is.
It seems like, oh, okay, fine. That's how you do it. Whatever. It's not a big deal. But to me, the more you can set up little life hacks and systems and buckets to put money, the easier and more comfortable it is to do this stuff. And it becomes a more frictionless habit where it's just kind of this nice system where you have, money flows to a certain place. It's in the right bucket. You pay from the bucket. It's all very clean. So I love that process. That works really well for me anyway. And a lot of my clients have noticed that works well for them too.
Yes, it's out of mind, out of sight. It's, it is why they started withholding taxes from people before they got paid.
Because no one does themselves.
Yeah, they want that, so that is kind of the same concept. You just have to have the self-discipline to do it from the beginning.
Yeah. So we talked about when they're paid, but no one reminds you. I mean, I remind my clients, I'm sure you do as well. But as far as like, if you're just someone generally not working with a professional, the IRS doesn't call you and say, hey, don't forget your quarterly estimated taxes. They don't do that.
No.
You're responsible.
Yeah, they don't.
For doing it, right?
Yes.
So, Mark,
and you're responsible for the penalties and interest for having not done
it. Yes, and we'll get to that. Absolutely.
You're responsible for that as well.
Yeah. So, you mentioned kind of how they're paid. Online is definitely more reliable. What about tracking? So, personally, I put all my payments in a spreadsheet. So, when it's tax time, I can just send that spreadsheet to you, and hopefully, that makes life easier for you. But do you recommend people track their payments outside an online system?
And I do. I think it's a really smart thing to do, because then you can see it when you're looking at, all your other information. You see what you've paid, and it's just like, okay, I'm on track. Another thing is this, and I find it hard to believe, but people forget that they've made an estimate. I have it happen several times a year during tax season, where either they think they've made a payment that they didn't make. That's probably happens more often than the other way around, but it truly does happen, where they say, no, I did not make that estimated payment, and they actually did. So if they had tracked it on their spreadsheet and kept their receipts, it would have been a lot better situation, because, once, you've paid the extra in, eventually you'll get it back as a refund, but it's still a bummer once you find out, oh, I did make that $13,000.
Why loan the government interest-free money?
Exactly. So I think tracking is always a good thing.
Yeah. Yeah, awesome. And of course, if you make an IRS account, which I've done, you have a profile, you'll see your history right there online as well. So I can log into irs.gov and click on log into my profile and look at my history, and I'll see my payment history there as well. So that's also a secondary way to make sure you track it. But I do track it in a spreadsheet externally, because I want to make sure I have my own tracking if something gets messed up on the government side. So
we should probably mention that too. IRS accounts, if you're someone who recently as say 6 months ago, tried to set an account out with the IRS and could not get verified, which was 80% of the country. The IRS has made it easier to do so. You should try again to set up an account. They have 80% of people are now getting verified. They flipped it. Now they want to see a picture of your driver's license and then a picture of you so they can do a face recognition thing. But once you have an account, like Michael said, you can always go back and see what's paid, what's not paid, print out. So it's, it's just a good thing to have. So I do recommend people do that.
Yeah, so much fraud out there. I guess they have to.
Yes. That people make life difficult for all of us.
Yes. So let's talk about what happens if you don't pay or you pay the wrong amount.
Yes. And I would love to go. I mean, there are percentages that I could quote, interest rates, 1 above prime, 3 above prime. So, but what I will say is this. In your first year, if you don't make a ton of money, they're going to send you a small penalty. In your second year, it's just going to be, and it can be up to 25% for failure to pay. So I just recommend, this is my little quote to people, and it's just my, it's not quite true, but I say it. Owing the IRS is like owing a bookie. There's juice involved, except the difference is the IRS doesn't keep the money in the neighborhood. At least the local bookie keeps the money in the neighborhood. So it's just this thing I say to people to get the point across that I can't tell you exactly what penalty and interest they're going to tack on. It depends upon things, factors that I don't always see, or things that you may or may not have done that I don't know about, that, kind of thing. So just know that there's interest and penalty involved, and it can get steep as the time goes along and you're still not with the program of paying your taxes on time.
So you said up to 25% of the amount owed?
Yes, of failure to pay.
That could be pretty steep for some.
Yes.
Okay.
Yes, it can get to be steep. So what we usually do with people that have gotten behind, and that happens, you're starting a business and you think I'll get that paid. I'll pay that a year or two. I need the money to grow my business. We have lots of small business owners that end up with a payment plan. They're on an installment plan. And so you get on an installment payment. You think, good, I'm good to go. What a lot of people that get on an installment payment don't really understand is this. If you get to the end of the current year and you file your taxes and you haven't paid the balance due for that year, it voids any installment agreement that you've set up with the IRS. And you have to start all over again. And setting up an installment agreements are time consuming and frustrating. So it's, you don't want to do it but once if you do it ever. Mm-hmm. You want to get it done and over as soon as possible. So that's something to consider.
On the flip side, just to give people some hope in case someone's listening saying, oh, well, I'm sunk, to give people some hope. My understanding is that when you call the IRS, that often you do reach people that are helpful, that are nice to you, that want to help you. And obviously working with someone like you, you can represent them as well and help them kind of climb out of these issues. So would it be fair to say that in most cases, there is always hope?
Oh, absolutely. 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 But you will probably have to buckle down and eat out less and do a few less fun things till you get your ship righted. Yes. But yes, we have people all the time that we help get on payment plans and get, themselves righted, that do well, that continue on and keep going and are still growing as companies. So yes, it absolutely can be done.
So it's like many things in life. Don't let it fester.
Don't let the fact that you haven't done what you're supposed to do in the past keep you from doing what you're supposed to do in the future. Just get it done. Yeah. We're happy to talk to you. Lots of people would be happy to talk to you, but we will be happy to talk to you and at least give you steps that you should take toward getting it straightened out.
Yeah. All right. Really, really valuable insights here. What about any other, tips or pitfalls related to quarterly estimated taxes that we haven't talked about that you'd like to share?
I would like to say that this is another misconception. An extension of time to file your tax return is not an extension of time to pay your taxes. So you people say, well, I'm on an extension. Did you pay any money with your extension? No, I'm on an extension. Extension is an extension of time to file your return without penalty. It is not an extension of time to pay your taxes without penalty. That is it's very difficult to get people to understand that. Even if you file an extension, you should send in money if you haven't been paying your estimates. If you've been paying estimates and you've been accurate with your planning, then you're good to go. But if you haven't, postponing and kicking the return down the road 6 more months is only accumulating more penalty and interest on the failure to file and pay estimates and pay your taxes timely. So just know that an extension does not mean you have more time to pay your taxes without some penalty and interest involved.
Yeah, this is really illustrating kind of the importance of not getting behind with the IRS. And I always tell people, hey, if you have, 3 or 4 debts, I mean, we've got credit card debt, car loan that's behind, IRS, like whatever, your top priority is likely needs to be the IRS. Like, unless something's going to bring
absolutely.
The car loan was a bad example because you got to drive, but let's say it's credit card debt versus IRS.
Exactly.
I generally say, let's get the IRS taken care of first. The penalties are steeper. Getting behind just kind of piles up and snowballs this interest. I mean, it can typically be a lot more problematic, in my opinion. Would you agree?
I absolutely agree. I sit down with people and try to go over budgets all the time and say the $200 cable should go until the IRS is paid off, and a few other things that people look at me like I'm an alien. But I think if you could just buckle down for a few months and get in the swing of it, then you would be better off in the long run. It's kind of that, postponing of gratification that, a lot of people have a little trouble with, but you just really have to do it.
Yeah.
Or at some point you're going to not be self-employed. If that's what you want to be,
yeah.
you have to learn to do these things, because no one is going to do them for you. They're not going to take your taxes out before they pay your company. Yeah. You're going to have to pay your taxes yourself.
Well, I appreciate that you've talked about that there's hope, there's paths to get through this.
Absolutely.
And of course, doing it right from the start is the best possible scenario. So let's end on that note with reminding people how they can get help. So obviously people know where to find me, but let's be sure we highlight the best place to find you. So you want to share your website with our audience? You
can find us on taxadvantagellc.com. We're on LinkedIn. We have a Facebook page. My email's kim@taxadvantagellc.com. For those of you that don't think you can afford help from a firm, you can go to irs.gov, and there you can actually find some helpful videos and stuff there for self-employed people. I would, suggest that you get help, though, whether it's through us or someone else, or just trying to figure it out using irs.gov. Don't just keep kicking the can down the road.
Right on. And you're too polite to say this, but I'll say it. You're very affordable and well worth it. So the money that you would pay Kim and her team is well worth, many times over the value they bring. So be sure you reach out and get help if you need it. So and of course, if you want to get in touch with Kim, just email me directly, and I'll do an email intro as well. So we work very closely together, and Kim is my personal accountant as well for my business and personal taxes and bookkeeping. So. All right, Kim, thank you.
You're welcome.
Your insights, really valuable today and really useful to walk through this. So let's go ahead and wrap up there, and a reminder to reach out to Kim at taxadvantagellc.com if you'd like to chat. And you know where to find me as always. I'm at elevationfinancial.com. You can email me directly at podcast@elevationfinancial.com, and I'd be happy to chat. So with that, thanks so much for joining us today. Have a great day. We will see you next time.
Bye, y'all.